Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 15th of January. Starting off with the FTSE 100, which seems to have bounced off both the 50 and 200-day lines and bounced off RSI 50 as well and broken that resistance line there from last month. Once again at now 82.20, so it looks as though we're heading into a golden cross and also with the RSI 50 rebound at least up to 8400. That's the target. Well, there's no end-of-day close back below 8200, which is recent multi-tested intraday support. If we do break back below 8200, then the worst case is the floor of that late 2023 rising trend channel. That's currently around 8110. Moving on to the DAX, which one presumes if the FTSE is up, the DAX will be up too, and it certainly is. Here you can see that we gapped up yesterday and we've held that gap. We had a nice bear trap island reversal, which actually meant that the open yesterday was a potential buying point there around 20,260. And if you were more cautious, then you could have bought at the open today. But in terms of the overall lay of the land here, we're right top of that rising trend channel from the autumn of 2023 running to 21,000. We're looking for that by the end of this month, while we remain above the latest gap floor there at 20,200. Moving on to the situation at the Dow, which has been out of sorts, so obviously over recent weeks, which is against the lay of the land as far as the initial post-election rally that we had. Here it looks as though we're finding support there at 42,000, the floor of that rising trend channel from back in April. Above that, the target, the 50-day line at 43,400. We've been helped along, by the way, that there's bullish divergence, so low for January, or at least below 42,000 for January, but higher RSI trace, and that's helping the situation at the moment. Bitcoin is next, and here it's been a bit of a dance in the 90,000s to 100,000 area, so the uptrend line there from back in the beginning of November around 92,000, and it's a line of resistance there from last month, basically at 100,000. So hoping that the market will be able to give us an end-of-day close above that 50-day line, which is currently rising there at 97,600, and then break that December resistance line there, 99,000, to then retest the highest levels of the year. After the bear trap rebound from below 92,000, we would expect that this market has at least found near-term support. On to gold, which has been trying to make the right noises until it failed at that October resistance line there, 2720. We need an end-of-day close above that, otherwise there's the risk of testing the floor of that rising trend channel from February at 2645. But hopefully at this point, we're not going to go any lower than that, even if there is a rug pull. Moving along to the pound dollar, which is interesting given the economic picture, and some supports come in here. Obviously, the inflation figures not as bad as expected. In fact, inflation not going up, so that was good. But we're still in that trajectory from the end of 2020 for a target at the floor of that falling trend channel, $1.18, while we're below at 123.50, which was the initial January support for this market. Moving along to the stocks and starting off with Arc Minerals, which I think for feels like centuries has been a hope for the bulls, and maybe this time will be 100th time lucky, something like that. But we've broken recent resistance there, 1.35 pence. We're also breaking through the, trying to break through the 50-day line at 1.38 pence. End of day close above the 50-day line, we could be looking at a retest of the post-autumn resistance here at 2 pence plus by the end of next month. But the key here is holding recent support at 1.2 pence. Moving on to Aptamer, which I interviewed a couple of months ago, I think, and here it looks as though we are still trying to turn around in a positive way. The initial target here, the top of that rising trend channel, 0.41 pence. Above that, i.e. 0.42, and greater than that, then we're looking for 0.6 pence by the end of the next month, which is the upper parallel of that rising trend channel base from back in July. This stage only back below the 50-day line, and day close back below that would really delay the upside or the recovery scenario. Onto a stock which don't think many people look at, but is an exciting situation nevertheless, given the basis that, or on the basis that we've had unfilled gap to the upside above a rising 50-day line, and we've broken recent neckline resistance 0.085. Basically, while we're above the latest support there on the 50-day line, down to 0.06, looking for up to 0.2 pence on the basis that we've had that unfilled gap to the upside after a bear trap rebound. Stock of the day, which was almost mentioned yesterday, but I was rather too excited about Trellus, is Fiinu, and here, obviously, they've got their deal in place. We were actually charting it previously, and we're looking for around the 1.3 pence level, and then best case was up to 2.8, but obviously that's been blown out of the water. The shares have already now filled the gap, which was the gap down from back in July 2023, and it's now really a matter of seeing whether there's enough momentum to give us an end of day close through 6.3 pence to get a full recovery here up to 12-13 pence. On the face of the news, perhaps the shares could go all the way back up again, but the market normally has its own ideas on these things. The current situation is that their upside is valid while we're above the 2 3/4 pence level. Can't really get much tighter than that at the moment. On to Gem Resources, the old URA holdings, and just the first sign here of a turnaround. We had the gap higher and then came back to make new lows. So view now is that while we're above the previous low there from November, it's a bear trap situation, and above 0.55, looking for at least the 50-day line towards 0.7 pence, even if we then fall again. But bullish divergence there, so lower low for January, but higher RSI trace, and that does give us the first idea of a turnaround. You can see how bad the market's been to Genus, in the sense that until today's very good update, the shares were actually at fresh lows. So obviously the market doesn't take any prisoners these days, but above a recent neckline resistance at £15.88, looking for the 200-day line there towards £17.80, even if the market then comes back after that. Moving along to a stock which I've taken quite a fancy to, which is GenIP, and here looks as though we're still in this rising trend channel formation. Top of the channel there, heading for 52 pence, which we could hit by the end of next month while we're above the 50-day line at 25 pence. Ideally, there's no sustained price action now back below the 30 pence level. Been waiting a long time for a potential turnaround in Jubilee Metals, and it looks as though this may be one of the more serious attempts to recover. We obviously had one of those in November, and then the rug was pulled again. Current situation is that we want to see the shares at least fill the gap there up to 4.65 pence, maybe head up to 5 pence or 5.1 pence over the next 2 to 4 weeks. But you can see already that 50-day line there at 4.4 pence is a barrier on the shares. On to Kistos, where we can look at it just on the basis that looks like rather better times for the gas situation. And here we've already hit the first target there around £1.21. Above that, we were looking for the upper parallel of that broadening triangle from September, £1.53 by the end of this month, especially while we're above the 200-day line at £1.29. On to Mast, which I've covered several times in the recent past, and here you can see why with that rising trend channel base we gapped through the 200-day line at the beginning of the week, and above that at the 0.18 pence level, looking for 0.3 pence by the end of this month or even sooner. In fact, we've got the gap down there from back in May last year at 0.32 to shoot for as well over the near term. On to mobile streams, which I was a fan of from the lower levels, and if I can get the right chart, you'll be able to see why. The situation here is that we had a rising trend channel breaking the resistance there around the 0.005 level. Rising trend channel now, we bounced off that, and the longer we stay above the 50-day line at 0.36, the greater the chance of a retest of the best levels towards 0.48, maybe by the end of this month. Another stock which has delivered the goods is StreaksAI, and you can see here that we had the first target there, 0.07, second target at 1.5, that's 0.7 rather, and looking for a fresh leg up now as high as 3.25 pence, hopefully by the end of this month. 3.25 is the upper parallel of that September 23 resistance line, and it looks as though the shares have got the momentum here to basically reverse the sharp falls that we had at the end of 2024. The line in the sand here in terms of the upside, we would like to see the shares stay above 1.5 pence, the previous target. On to a real favourite here at Zacks Traders Cafe, and that is Sealand Capital, largely because it was called up here from 0.5 pence. We've blown all the trend lines and targets out of the water now. I think 6.5 pence the level there, so really try to look for the next level up. That's probably going to be a parallel line based on the one that we've got at the moment, but let's see whether we can close above 6 pence, and then we would have that implied 8.5 to 9 pence target by the end of next month. Ideally, we stay above the 5.5 pence level, whatever happens, for us to get further upside. On to SRT, and here SRT Marine Systems looks as though we're in a steep rising trend channel and ready to break out. Top of the channel there at 70 pence, which we're looking for maybe by the end of next month, while we remain above the floor of the channel there at 41 pence. But it's a punchy call, largely on the basis that we've gapped higher and also spent a lot of months consolidating, so we should be ready to move higher. On to Trellus, which has been apart from the situation at Fiinu, has been the situation to watch in terms of the technicals. Here you can see the shares managing to hit the second target there, around 3 pence. Above that, we've been looking for best case up to 6.25, although obviously today the situation has cooled off, as you might expect, after all those gains. Finishing off with a previous much followed situation, which is Upland, and here just the first signs of a turnaround now. We've got a break of that resistance line there from November. Top of the channel here is basically the top of the range, so heading towards as high as 1.45 pence, while we're above basically recent resistance around 1.25 pence. So 1.25 pence the level to break in order to get towards the 1.5 pence level. That's it for me today. More updates tomorrow.